The world has changed. Have we adapted? Is it still business as usual? Can we get what we need? Can I send my loved ones money? Can I even go to the bank? What now? As RCBC looks ahead, we're keeping to heart your every need. With RCBC's widest range of digital services today, we can help you continue to grow your business. Send support to your loved ones. Get cash when you need it. You have our services on hand, so you can continue banking with us easily, safely, and conveniently. Hand in hand, let's keep going and leave those worries behind. Because at RCBC, we are moving forward with you every step of the way. Learn more and get started now. The world.
Welcome to Revolution of Cryptocurrencies as Assets, where fintech leaders talk about Bitcoin, Ether, and other cryptos as the new digital gold. This webinar is presented by the FINEX Information and Communication Technology and Capital Markets Development Committees, and sponsored by Binance, Blumex, and Rizal Commercial Banking Corporation. Before we start, may I invite everybody to a prayer, to be followed by the Philippine National Anthem.
In the name of the Father, and of the Son, and of the Holy Spirit. Amen. Our Father, who art in heaven, hallowed be thy name, thy kingdom come, thy will be done, on earth as it is in heaven. Give us this day our daily bread. And forgive us our debts, as we forgive our debtors. And lead us not into temptation, but deliver us from evil. Amen.
Good morning. Good morning, everyone. I am Attorney Mark Griseta, FINEX ICT Committee Vice Chairman. I am also the Managing Partner of Goriseta Africa, Cauton, and Saavedra. I also head the Tech, Media, and Telco Group and Corporate Group Practice of our law firm. I will be your host for this webinar entitled Evolution or Revolution of cryptocurrencies as assets. Fintech leaders talk about Bitcoin, Ether, and other cryptos as the new digital gold. We are simultaneously broadcasting live in Phoenix's official Facebook page and YouTube channel. Thank you again for everyone for joining us this wonderful Thursday afternoon. We are thrilled with the overwhelming response from both FINEX members and non-members in showing great interest in today's webinar with 100 plus registrants or attendees. Today, expect to hear and learn firsthand from our fintech leaders as they share their thoughts and first mover experience in the cryptocurrency space. Expect them also to give their bold predictions as to the future of cryptocurrencies as an asset class and how it will transform. Again, this event made possible by and RCBC. To formally open this event, may I call on FINEX President and ACRA Law Senior Legal Counsel, Attorney Francis Edlim. Good morning. Good
Uh,
afternoon.
Thank you very much, Mark. Good afternoon to our FINEX members and guests. I would like to welcome you all in our today's webinar, Evolution or Revolution as the case may be, of cryptocurrencies as assets. In this webinar, we're very privileged to have cryptocurrency experts, BloomX CEO Israel Keys, and head of Binance Labs, Wai Zhao, will talk about what we all need to know about cryptos and why it is now tagged as the new digital gold. Bitcoin is the most used digital currency today, and it continues to be on top of cryptocurrencies in terms of market capitalization or value. As finance officers, we need to know the finer points of cryptocurrencies. Currency can indeed transform the world of finance and its future technology into something phenomenal. And I think we're seeing it now. Thank you, Binance, BloomX, and RCBC for making this event possible. Thank you also to the ICT committee for organizing this webinar, together with the Capital Market Development Committee. And thank you to our hardworking staff, headed by Mike Pinluan. I'm sure that this is a timely and surely an informative webinar. Thank you and enjoy the afternoon.
Thank you. Thank you, Attorney Francis. Now let me just remind all our participants in the meeting room to use the Q&A button on your screen for your questions. We will try to go through all the questions as time permits. So for today, we are very fortunate to bring you powerhouse speakers for today's webinar. Cryptocurrency experts, Mr. Wei Zhao, head of Binance Labs, the venture arm of Binance, the world's largest crypto exchange, and Mr. Israel Keys, Chief Executive Officer of BloomX or Bloom Solutions Inc., a virtual asset service provider licensed by the BSP. Each speaker will have 15 to 20 minutes for their message or presentation. Thereafter, Q&A will follow after their presentations. So without further ado, let's proceed. Our first speaker is Mr. Israel Keys. Israel is the founder and CEO of BloomX, one of the country's first licensed and regulated virtual currency exchanges. Israel has a background in technology startups and international humanitarian aid. From Australia, he has spent more than 15 years abroad working on everything from rural community development in Mozambique to technology startups in the US. Israel holds degrees in engineering and science from the University of Queensland, Australia, and a master's in public administration from Harvard University's Kennedy School of Government. Let's all welcome my friend, Mr. Israel Case. Israel, welcome here. Good afternoon.
Good afternoon. Thank you, Mark. I'll just share my screen, can I? Okay, let's get going.
Perfect.
Okay, can everyone see that? Well, thanks
Looks
again,
good.
Mark.
Looks good.
And thank you for this opportunity to share. $9 trillion. That's how much money has been printed by the Federal Reserve of the US in the last year. In fact, it's just an estimate. $9 trillion is mind-blowing and represents 20% of all US dollars ever printed in the history of that currency. That is, 1/5 of all US dollars ever created was created in the last year. This has been the response to the COVID-19 crisis, and it's only an estimate of the increase of money supply in the US alone. I wonder how much BSP has printed in the last year, or the Central Bank of the Philippines. Good afternoon. Now, if $9 trillion was printed, is the money printed in the last year is not enough to convince you to buy Bitcoin, I'm going to give you 3 reasons why you should at least dip your toe into this revolution. I've taken the liberty to somewhat rename my talk, and I want to give you 3 reasons to invest 50,000 pesos into Bitcoin today. Why 50,000? Well, if you're thinking of buying a new iPhone following Apple's announcement, I'm asking you to consider buying Bitcoin instead. You can decide if you want to give your money to one of the biggest companies in the world or invest it into your future and the future of money. So let's get started. The first reason to invest 50,000 pesos into Bitcoin today is because Bitcoin's supply and inflation are known. As you know, you're all financial executives. Money devalues as more is created. It's called inflation. Unlike the untold trillions of dollars that a central bank of a country might print, where we do not actually know how much has been created, we know exactly how much Bitcoin has been created. Bitcoin is a digital, self-governing alternative to traditional money. The amount of Bitcoin created is governed by an algorithm. It is not governed by people who might be tempted to increase the supply. Its supply is transparent. At any point in time, we may know exactly how much money has been minted. New Bitcoin is created every 10 minutes. This Bitcoin is created as a reward for those participating in the network in a process called mining. Mining maintains the integrity of the global transactional database, or all the records that the Bitcoin system holds. It ensures that transaction records are tamper-proof and that people who hold Bitcoin cannot spend more than they have. The algorithm reduces the reward roughly every 4 years in a process called halving. It kind of asymptotically reduces the supply and therefore increases the value of the currency itself. Today in 2021, as shown in this table, 6.25 Bitcoin are issued every 10 minutes. If you add this up, we'll reach a point in time, roughly 120 years from now, where all Bitcoin will be mined. Once we reach 21 million Bitcoin, no more coins will ever be minted, and its supply will no longer be inflated. knowing its supply allows us to do some maths. So I was told to keep it simple. Imagine that we took 5% of the $100 trillion bond market and invested that in Bitcoin instead. If we divide that by the total amount of Bitcoin ever to be created, we can arrive at an estimate valuation of over $238,000 dollars per Bitcoin. Bitcoin is currently trading just above $54,000. If you others have made more extensive models, like the one I show here, which is often referred to as the stock to flow model, and factor in the halving of Bitcoin mining reward over time. The model predicts that we'll reach $100,000 within the next year and $1 million before the end of the decade. Note the scale on the left-hand side is logarithmic. While it's next to impossible to predict the movements of the market, the known and limited supply of Bitcoin, I believe, gives us a firmer foundation of the value that we can possibly obtain from less transparent central banks. So you might ask, how about other crypto? Isn't this talk about cryptocurrencies in general? Well, there are over 10,000 cryptocurrencies, and most of them are listed on the CoinMarketCap webpage. We might be able to go into more detail into some of those in our panel later, but there's a lot of interesting stuff going into the space. I think the best way to learn about crypto is actually to start with Bitcoin. Not including all the stable coins, Bitcoin dominates the broader market with a 70% market share. There's thousands of cryptocurrencies out there. They may differ in their supply. For example, some have more than 21 million coins that might be able to be issued. Some have an unlimited supply. Others differ in their privacy and add more security about who and when transactions occur. Others are trying to increase the transaction speed of the blockchain network. And others, again, differ in purpose. So you'll notice different companies issuing tokens, and also the new things around things called NFT, which are producing artwork and limited supply assets on the blockchain. Ethereum, probably the second most popular cryptocurrency, for example, has an unlimited supply and is designed to be a platform for creating crypto and other digital assets. As I said, we could spend a lot of time delving into each one, and you should look before you buy. Okay. Let's go into the second reason. The second reason is, frankly, I think you should invest in Bitcoin today because I don't want you to miss out. This is possibly the greatest financial revolution of our time. Over the last decade, Bitcoin has outperformed every other asset. If you look on the top right of this table, you can see that it outperformed the NASDAQ 100 by a factor of 10. Yes, there were a couple of bad years in 2014 and 2018. The return was a negative 58% and 73%. They were gut-wrenching corrections, but also good times to buy. Unlike previous bull runs, this is one we are currently in, has been notable because of the institutional and business investors coming into the market. Last year, Elon Musk bought $1.5 billion for his company Tesla, which is also now accepting payment in Bitcoin to buy their cars. Billionaire and hedge fund manager Paul Tudor Jones made what he calls a macro bet by betting more than 1% of his assets into Bitcoin. He wrote a public letter to his shareholders, which you can read, that makes the case for buying Bitcoin a hedge against the rampant inflation of the US dollar. To those $9 trillion that have been printed in the last year, Paul's solution is to buy Bitcoin. Similarly, Ray Dalio has recently said that Bitcoin has been proven its place in portfolios. Ray Dalio is a hedge fund manager, and that has recently talked a lot about debt crises and the rise and fall of various currencies throughout history. Finally, Michael Saylor has come to notoriety as CEO of his publicly traded company, MicroStrategy. He has invested more than $1 billion of the company's treasury into Bitcoin. He had to get the board manager's approval for this, of course, and they are also being paid in Bitcoin as their salary. He even raised debt to further finance the investment. And he's doing it for similar reasons, as a hedge against the devaluing dollar. And there's been several other companies that are also making similar bets, public companies in the US. And this has really pushed the Bitcoin market in the bull run in its current era. But it's not all happening in the US. Philippines is actually records one of the highest ownerships of cryptocurrencies as a percentage of internet users. And this was a study recently done in January last year. Isn't it risky? Well, of course, as you know, investing is not without its risk. As mentioned earlier, in 2018, the price of Bitcoin dropped by 73%. But this is normal for any nascent asset. If you look, however, at the volatility of Bitcoin over time, you will see it decreasing as liquidity is increased. So you'll see here on this graph, the red line is the 60-day volatility of Bitcoin over time. And you'll see it's gradually decreasing towards the right. And that in the last 60 days, for example, we've seen a price range of 8%. Finally, the last reason I think you should buy 50,000 pesos worth of Bitcoin today is that you can essentially be your own bank. Now, this is potentially going to get a lot of you up in arms since you work for banks yourselves, which is why I have a big asterisk next to the word bank. I don't mean a bank like BDO or RCBC. Bitcoin, unlike any other asset, has zero counterparty risk. If you take responsibility for storing it yourself and not leaving the cryptocurrency on the exchange, you do not need to rely on anyone else to secure your wealth. Now, custody of funds is big business. Many of you listening are probably in that business, the business of storing and ensuring the security of the wealth of others. Bitcoin as a technology allows an owner to store that wealth directly. When creating a wallet, two keys are generated. One public key allows people to send you Bitcoin and perform transactions. A private key, on the other hand, is something that you keep secret and can be likened to the keys to a safety deposit box or a safe that you might have in a house. One should never share the private keys of your storage. With these two things, we are able to own the wealth that we may hold in Bitcoin, but also allow us to transact with others. In 2006, I lived in a country called Mozambique, which is on the southern east coast of Africa. It's one of the poorest countries of the world. It boasts that it's part of the top 10 poorest countries. Every month, I used to travel to Zimbabwe, which bordered its western border. I used to change money at the border where money changers would be on foot and waving wads of cash in their hand. You would exchange about $100 US for a bag of Zim dollars. And I've shared a picture of some Zim dollars from the time here on the screen. If you look closely, you'll see an expiry date on the $50 Zim note you see there, that there's an expiry date of the 31st of July, 2007. In fact, the government was printing so much money at the time, it was running out of paper. Some notes you could see had been printed over old notes. It was terrible. Citizens and Zimbabweans would leave for work in the morning and not know if they could afford the bus trip back home, let alone buy any essential foods or goods. At one point in time, I was trying to offload a bunch of old Zimbabwe dollar notes to a beggar on the street, and he promptly threw them back in my face because they were last month's edition of the Zimbabwe dollar and were worthless. Governance was affecting millions of people in the country. Now, I don't think, and I certainly don't hope that that will ever happen on a global level. But for me, it highlighted the amount of trust that we place in our currencies to hold our earned wealth and the value that we may have accumulated. So how do I actually go about investing 50,000 pesos in Bitcoin? Well, I so happen to be the CEO of a licensed exchange in the Philippines. And my first recommendation is to go to a licensed exchange. There's a lot of Bitcoin scams, unfortunately, out there, even in Australia, where I am right now. Bitcoin, unfortunately, has attracted all sorts of actors. And like any other exchange or asset, you can buy Bitcoin at an exchange, and preferably a licensed exchange. We are actually have been in this business since 2015. We started out in the business by producing or creating a software application that would reduce the cost of money transfer, in particular remittances back to the Philippines, using cryptocurrency. At the time, we hid the use of cryptocurrencies because we didn't want to complicate things for the end user. But now we've seen such an increase in the interest of crypto that we are coming out now with a new application which will allow people to buy over 150 cryptocurrencies directly. As I said, we're regulated by the Central Bank of the Philippines. A lot of that regulation is evolving, and it's important that we communicate to them our intentions and work with them. And as we roll out this new app and to allow you to be able to buy those 50,000 pesos worth of Bitcoin, we've opened up an opportunity on our invite list, which will allow you to jump on our platform as an early user. And I'm allowing the first 10 people who sign up today, who use this FINEX referral code and credit their account with 50,000 pesos. If this is not another reason for you to buy more Bitcoin today, we will add another 1,000 pesos on top. We'll have to, of course, conduct our normal due diligence and KYC processes, but we'd love you to be able to try out our new application, which will give you access to more Bitcoin. So I'll just leave that on the screen there. The referral code follows R, the letter R on our application webpage. But just sign up, and I'd love you to be able to check it out. And once you've successfully KYC'd as a user and you've deposited money, we will credit your account with 1,000 pesos. First 10, that is. And that's really it. And I look forward to being able to chat later with Karen and receive further questions from the audience, because I feel like I've just touched the surface. But I encourage you to jump onto our app online and sign up. And if there's absolutely anything, we can continue this discussion later. Feel free to email me at israel@bloomx.app. I enjoy talking with others and learning more about the financial industry and how Bitcoin can be a part of that. So feel free to reach out to me. And thanks again for this time and this opportunity.
Thank you, Israel. Thank you for that wonderful uh, uh, it actually now to add 50,000 more to the Len, if you can focus now to Wei. Wei serves as the head, if you can hear me. Okay. Wei serves as head of Binance Labs, the venture arm. Is it okay now? Okay. Wei serves as the head of Binance Labs and cryptocurrency infrastructure provider behind the world's largest digital asset exchange, Binance. Wei brings over 15 years of executive and financial management experience, scaling technology, internet, and media companies internationally. Previously, Wei served as CFO of Zhaopin.com and Charm Communications and helped lead these companies through their initial public offering listings on the New York Stock Exchange and NASDAQ. In addition, Wei orchestrated the landmark acquisition of LGBTQ social networking platform Grindr, where he currently serves as vice chairman. Wei began his career at Goldman Sachs Hong Kong in investment banking, later moved to its Asian Special Situations Group. Wei graduated from Harvard University with a bachelor's degree in economics and East Asian studies. Let's all welcome Mr. Wei Zhou. Wei, I understand you don't have a presentation, but please share with us some message or
Yeah, sure.
anything you can.
Great. Thank you, Mark, for that warm introduction, and thank you, Israel, for that very insightful presentation about Bitcoin. I want to give a little bit. Yeah, I don't have a beautiful presentation prepared. But I do want to sort of cover a couple of insights in terms of what we do at Binance Labs, and then sort of how we sort of see the future of cryptocurrency, and then also the evolution, I think, of crypto assets, right? Basically, Bitcoin being the sort of the leading brand, I think, within sort of the crypto assets industry. I think so at Binance Labs, we basically provide investments. Like we're the investment arm of Binance, and we've invested in over 100 plus projects and companies, both in the forms of equity investments, as well as in the form of token investments. And I think, Israel did a really good job covering, I think, the use case of Bitcoin, right? And I think when it first started, I think, in the white paper, it was basically started off as a decentralized P2P payment on a decentralized blockchain network, right? That's sort of the original use case of Bitcoin. And sort of 10 plus years sort of into sort of where we are today and what we see Bitcoin, it's actually, to a larger extent, have received, fairly certain recognition and as well as I think acceptance by a lot of the mainstream, I would say, Fortune 500 companies, as well as sort of mainstream Wall Street. Like, 4 or 5 years ago, most of the Wall Street banks were basically negging on Bitcoin as a speculative asset. But I think even now you have companies like JP Morgan, Morgan Stanley, and Goldman Sachs coming in and are building up their own sort of Bitcoin and crypto asset investment business and investment capabilities, mainly because I think it has been generally accepted that Bitcoin is as a not just a storage of value, but even potentially an inflation hedge, as we have previously discussed. Secondly, I kind of want to focus on the second asset that's mentioned here, which is Ether. Ether is built on the Ethereum network. That's the token that powers it. And what's really, really interesting about Ether and sort of and the use case that has created by Ether is the development of a smart contract mechanism that enables, at the same time, Ether is also a decentralized network that runs similar to Bitcoin, where you have basically, you have miners that run the transactions and then also, mine for Ether blocks and get rewarded Ether blocks as they, process transactions on the Ethereum network. But one of sort of the iterations of Ether that was really interesting is the development of the smart contract. And all that is basically a contract between two parties or multiple parties that is encapsulated within the blockchain. And what really Ether has empowered, I think, is actually the development of the cryptocurrency or the crypto assets that we see today, which basically allow for a lot of new projects, especially startup projects, to basically issue tokens on the Ethereum blockchain and raise capital in the form of Ether, and basically use that token that they've sold or raised, and basically build their projects or companies, or either sort of in a for-profit manner, or even sometimes in a nonprofit manner. And I think this is actually sort of has led to the proliferation of the industry. Especially, it has allowed for startup capital to flow to entrepreneurs, irregardless of where they are physically located in the world. I think prior to sort of being able to fundraise on the blockchain through the Ethereum network, most the typical types of fundraising is basically you have to go to venture capital, you have to go to banks, or you have to go to friends and family, or you have to basically go to even various type of traditional institutions to raise capital. And if you're doing something new and something innovative that is that a lot of people in the existing world kind of don't understand, unless you sit in Silicon Valley, or in Beijing, or in London or New York, or in Southeast Asia and Singapore, it's actually very difficult and extremely challenging for entrepreneurs to raise capital, right? You have to basically go to these sort of startup hubs to get access to people who understand your business model. But with sort of the rise of the Ethereum network, now entrepreneurs can actually sort of put out their fundraising plans online, and then basically and reach out for investors who want to partake in their adventure, or in their innovation. And I think that's sort of the power of the Ethereum network, and sort of that has basically led to the proliferation of additional crypto assets, right? Funding different types of initiatives. Now I think now we're sort of almost at sort of the third or fourth iteration of that, with the rise of decentralized finance, right? People have been able to lock capital, investment capital into the blockchain, and receive rewards in the form based on lending protocols that's built on top of Ethereum, as well as sort of NFTs, which we've talked about, non-fungible tokens, which are basically collectible assets because they're unique, right? Representing either in an online form of an art, or an offline form of art, right? So I think, and I think where Binance Labs sits at all of this is actually Binance itself. We've built through the community, through sort of the larger Binance community, of what we call the Binance Smart Chain, which essentially is a different version of Ethereum, but it serves the same purpose. I think one of the advantages we feel is that with a lot of projects that's sort of building on Ethereum, what you call gas fees, right? These are basically transactions fees, right, that you pay as you transfer sort of your Ethereum or your transfer assets, becoming much more expensive. The Ethereum network has become, I think, less accessible I think, to people outside of sort of tier one countries where they can afford to pay some of these fees. So I think one of the significant advantage of the Binance Smart Chain, which, you know, my team, the Binance Labs team, have been investing aggressively into projects that are building on top of the Binance Smart Chain, which basically serves pretty much the same purpose as I had mentioned in terms of the Ethereum blockchain, in terms of allowing for smart contracts to take place, allowing for fundraising, and allowing for DeFi, and also allowing for NFTs to be issued and traded and stored on sort of the Binance Smart Chain. So sort of, and I think, you know, I'm really happy to be here and to talk about these things. And then I'll pause here because I think we have a larger panel coming up, and I'll be happy to answer, you know, anyone's questions with regards to any of the things I have discussed, and also to maybe share a little bit about, you know, what type of investment opportunities that we're looking at Binance Labs, and then also sort of what are some of the more interesting projects that we have invested in over the last, 6 months. Thank you.
Thank you. Thank you. Thank you, Wei. I hope everyone can hear me now. Is this better?
Yes.
Okay, perfect. Thank you, Wei. Yes, so we're excited in the Q&A or the panel discussion to hear from you, your plans of Binance here in the Philippines and your plans in entering the Philippine market as well. So now, before we proceed to the Q&A, I would like to introduce to everyone our moderator, Ms. Karen Liza Roa. Karen has over 25 years of experience in major global financial institutions here and in the US with companies such as Chase Manhattan Bank, Citibank, and AIG. Her field of expertise is in asset, wealth, and investment management. She is currently president of First Metro Asset Management, an investment company managing and distributing mutual funds. An advocate of education, Karen lectured at the Ateneo de Manila University and the University of the Philippines, teaching management and finance courses, both at the graduate and undergraduate levels. Karen has a degree in legal management from the Ateneo de Manila University and an MBA from Fordham University, New York. Karen, the floor is yours.
Good afternoon, Mark, Wei, and Israel, and everybody else listening on this call. We've got a lot of things to cover. It's been a very interesting topic and a very hot topic over the last couple of weeks or months, if you will. So why don't we get started, all right? I wanted to kind of like revolve the questions around first, you know, just more descriptive, you know, for everybody's benefit, you know, just to get a clear understanding of what we're really talking about, and then go into the uses a little bit, and then the investing and probably the governance of that. Okay, so, and then I'm going to try to sift through and filter all of the questions that the audience are throwing at us, so that we can hear them out as well. Shall we begin? All right. First of all, Israel, I wanted to find out, okay, you mentioned that there are so many actors. Can you give us, you know, a description of who are the actors in the crypto ecosystem? There are questions like, who's the issuer of this? Okay, you mentioned about custodian. There was a question earlier, what kind of assurance that we have that the custodian is, you know, a safe one? And the exchange. So just give us a, you know, I guess a picture and a description of the actors in the ecosystem.
Sure, I can start, and certainly Wei could probably jump in also. So I think what we've seen over the last 10 years, or even more recently, has been a rise in kind of regulated and licensed exchanges in the area. So exchanges allow, like any other kind of asset exchange, the ability to buy assets. And in the crypto space, there are several exchanges worldwide, Binance being the largest exchange, where you could go and buy cryptocurrencies, usually from an order book, in a similar way that you might buy stock from a stock exchange. So exchanges play a big part of the space. We're starting to also see decentralized exchanges also, which are a little bit harder to imagine, because these exchanges allow you to do what's called peer-to-peer exchanges, which would allow individuals to trade directly with each other without the intermediary of even the exchange business itself. So exchanges are a big part of the ecosystem. Individuals are also, because of the nature of the asset, people are able to exchange it in a similar way that they exchange cash. So I could provide you with some Bitcoin, Karen, without anyone in between that transaction. And we could do that over the internet. And there would be no need for an intermediary bank to get involved, even though we're thousands of kilometers away. And we could do it in a similar way that, if we're down in the markets in the Philippines, I could hand you 1,000 peso cash bill. And so what's interesting about this technology is that it really empowers individuals to be able to transact directly with each other. Other actors, of course, include national governments and specifically central banks and regulators in the various countries. And a lot of these policymakers are working hard to catch up to figure out what to regulate and what not to regulate around the technology. And in the Philippines was one of the first countries to come out with regulation around Bitcoin and its use in the country, both in the region and globally. So I'd say that probably the main actors, and there's other people out there, obviously, in the space. Unfortunately, you do see a lot of scamming and fraudulent activity from bodies who are perpetrating to provide people with returns that are high returns for Bitcoin. A common scam that happened in the Philippines in the last bull run about 3 years ago, for example, was the suggestion that you couldn't buy one Bitcoin because at the time it was about $1,000. And so you needed to invest your money with this group so that they could consolidate it and buy one Bitcoin. Unfortunately, they were taking advantage of a misconception that you need to buy one Bitcoin. In fact, you can buy many fractions of a Bitcoin. You don't need to buy one complete Bitcoin. And so you see a lot of prevalence of these actors who are trying to take advantage of misinformed individuals to kind of invest in some vehicle. But that's not unlike any other, financial industry, right? So there's a lot of, fraudulent schemes and actors that are preying on people misknowledge. So it's very similar to, I think, traditional assets in that sense, where you've got exchanges, you've got regulators, you've got individuals, you've got actors. We don't, exchanges are kind of maybe acting somewhat like banks in a sense, to kind of make it parallel to the traditional markets, where they are acting as custodians of funds also when you're buying and selling assets on their platform.
Okay, thanks, Israel. Wait, I'm going to take a step back a little bit and just try to find out first and foremost, what was the vision for crypto, and what need is it trying to meet that traditional currencies or asset classes aren't able to meet?
Mm-hmm. Yeah, I mean, I think at the heart of it, I think cryptocurrency sits on blockchain technology. And I think what you're seeing is basically cryptocurrency provides a use case or different use cases that has been unmet, I think, by traditional financial service providers and by traditional currency. And I think a lot of that, if you look at sort of just Bitcoin as a whole, right, it was sort of the original Bitcoin blockchain system was basically, well, how do individuals hold their money? Right, because I think if other than sort of and then it goes back sort of much longer into history, sort of like what is a storage of value, right? Because I think if you go back in history, people held on to precious stones and gold, right, and they actually store it in their own sort of personal safe, personal vaults, right, because you own it, right? As sort of financial institutions have built out and financial services have built out, we basically started to placing our value, like our money, within third-party institutions, right? And I think what happened out of sort of the 2008, 2009 financial crisis is you basically realize that these financial institutions that are supposed to be holding your money don't have your money, or the assets that's supposed to be there are not there, right? And then with the rise of sort of, prevalence in internet technology, better speed, more people online, it created a sort of a decentralized network of a public ledger where you can actually store something of value on that ledger. And then by only the private key, it allows you access to that ledger. So essentially you can actually start to actually have physical ownership of your money. Right. And that's sort of like the fundamental core of just sort of like, it gives individual the freedom to sort of, control his own money, right, without relying on a third party institution. And I think that sort of, these concepts are not new, right? These are old concepts as well. If I move around, before I would carry money on, right? It could be the cash form, but in the old days, it'd probably be gold or silver, right? Because these are generally accepted currencies cross culture and cross countries. And Bitcoin, I think, has sort of become that, right? It serves a purpose both for the storage of value, and now more so, it actually has sort of like the perception of value, in that sort of most people will accept Bitcoin, for whatever the price is, right? Given the liquidity of the market nowadays. So I think that's sort of like the fundamental of cryptocurrencies. Basically, you can control and actually hold your money without relying on sort of third party institutions, which essentially are the banks and the traditional financial service providers. But the thing is that I think there is a huge hurdle, I think, for the average person to do that, right? Because it's not an easy process, and most people don't want that responsibility. I think most people are generally used to relying on third parties right. with trusted names to sort of to do that service for them, because it's easy, right? Like users want something that's easy and accessible and safe. Right. And I think that's sort of the role that, over the last 5 years, at least, sort of centralized exchanges have become sort of a place where, that are become, are semi-regulated institutions. And the cross-national ones or cross-international ones are searching for regulation and for certainty. I think the single country service ones, I think, have definitive regulation. And the centralized exchanges, I think, have evolved, I think, into a new type of financial institution that did not exist before. Right. And these centralized exchanges now serve that role because it is easier to use them, right? You use them the same way you use your online banking, right? You have your access code, you have your Face ID or your security, you get in, and then you can actually start to manage your money, right? But then you have the option of actually moving these tokens, especially say Bitcoin, off these centralized exchanges into your own personal vault, right? If you spend the time to research on how to set it up, right, then you can actually have the option or the freedom to do that. I think that mindset, I think, is actually taking more and more hold, and individuals, are beginning to realize that. And I think what has happened over the last 18 months because of COVID, because of the restrictions and movements, it's like because you can't actually physically go to your banks to, or ATMs, you've actually, most people's lives, I think, over the last 18 months have moved from offline to online. Right. And it just so happens that, as you interact with people around the world, how do I send money to you? Right. like very classic use case that we see in the Philippines. Like we have people who rely on, family members from overseas to send money to support their families in different parts of the world. How do you do that when you can't go to the bank and physically make that deposit and pick up that deposit? Right. And I think that's something that if you spend a little bit of time, you're like, wait a minute, I can do that with cryptocurrency, right. In a secure and manner. And I think that's something, that use case is brought up because of the infrastructure of crypto and Bitcoin has already been laid, I think, by players like Bloom and by Binance. But sort of just that individuals are starting to learn to use it in this new way on top of this, infrastructure. And I think, as we develop and grow, there's going to be more and more use cases that's going to come about, some organically. I think some, most of them, I think, will come up organically. Some will basically be, really innovative stuff that we haven't seen before. I think that's what we're excited, and that's why we invest in this space.
Okay, thank you. I'm going to, as a follow-up question, and I'll throw it also to you, Israel, in a short bit.
Mm.
But um, if anyone can actually create a cryptocurrency, then isn't there a question about its intrinsic value? Secondly, also, is that it's a technology. We talked about the blockchain and we talked about the network. How does a technology translate into a financial product, actually? And therefore, after all that, what is the underlying asset? I think that's everybody's kind of confusion, if there is, I mean, yeah.
Yeah, paper and the printing press is a great technology also. So, we've used paper throughout history to create financial assets. This is kind of no different, but more of a modern inception of that, I'd say.
On the other hand, Israel, I mean, paper versus, you have the backing of a government for the paper or a commodity and so forth, right? So I guess, if you can just kind of like, unpack all of those issues, who wants to start off?
Yeah, I'll jump in here. I mean, I think
Okay, please do.
Something has value when there's a transaction, right? Like if I believe this thing has value and you believe this thing has value and you and I transact, this thing has value, right? That's it. Like anytime there's a transaction, that's how value is created, or that's how value is assessed on what's being transacted. And I think and then that goes back to sort of like that goes back to the idea of a marketplace, and then the marketplace goes back to the idea of a community, right? Like Bitcoin started off as a niche group of tech, super sort of outsider community, and then now it's growing into sort of a much bigger 100 million, 200 million plus global community, right? And I think a lot of times like and sort of for some of these newly issued coins. Or if there is, as long as there's a community behind it and supporting it, you can ascribe a certain type of value to it, right? And it just so happens that this community could be small, it could be big, right? The bigger the community supporting it, right, and then adopting it and using it, then obviously this coin will have more value, right? As long as that community stays and grows. And I think that's something that that's actually much more relatable to people that like this time around. I think with COVID, when you're spending all this time online, whether you're playing online games and then you talk to your friends on Discord, or you're on these various chat rooms and you're doing these different things, a lot of communities are forming. And I think that's actually sort of the future, is basically what these communities need to share things with each other, right? Or how do they share these things with each other? Like you could have an NFT community that collects, like CryptoPunk art. Like what the heck is that? I have no idea. It's just a small meme of these random figures, right? But that is a community. And then there is a value to these things because this community believes in it, right? I think as long as and one of the interesting things about sort of token issuance is that before this community gets created, all the rules are written in black and white in terms of what's the token supply, how many, what's the token release schedule, right? Just like Bitcoin, there's a white paper, there's sort of document that you refer to in terms of who are the founders, who are the creators, and then what powers it, right? And I think that's something that have generally existed, right? And if you like in the public markets, what I've done is basically written IPO prospectuses, right? That's essentially sort of what the white paper sort of models itself kind of after, but in a much more free-handed kind of way. So yeah, I mean, I sorry, I'm babbling a little bit, but I just think like it goes back to sort of like what's the value of it? Well, it goes back to sort of like how big is the community that's using it, right? The bigger the community that you have that's using it, then there's obviously more intrinsic value. It's just that before we used paper, we used fiat money, right? Whether it's US dollars or Philippine pesos or Singapore dollars, but that's restrictive. And that community, that's restricted mostly, other than US dollar per se, to people of a country, right? But now you have digital communities that's cross-country and multinational. Well, how do they talk to each other? How do they share, things of value with each other, right? I think that's sort of the biggest difference, I think, between fiat money and the usage of, just say Bitcoin. Right? So.
Thanks, Wei. Israel, your thoughts?
Yeah, I'm trying to
Further?
remember your exact question, but I think how Wei describes it in terms of, it's kind of a collective agreement with lots of people that kind of give a currency value. If suddenly all the people in Australia decided that the Australian dollar was worthless and did not want to use it as a medium of exchange to buy their bread or their expensive lattes, then flat whites, I should say, then we would, completely lose any value in the currency. And so the value is kind of held up, as it were, by a collective perception of value and what it can be exchanged for. I think in contrast to fiat currencies or traditional currencies, that kind of is stipulated from the government of a nation. So there was once upon a time, before central banks and the banking systems that we see now, where people, generally wealthy people, would hold their wealth at the local bank.
Right.
And because there was at that time no kind of shared medium of exchange, they would write down kind of essentially promissory notes or things on pieces of paper that said, yes, you have this much at store in our vaults, and you can take this promissory note to another bank across the country or across the continent and get an equivalent amount on the other side. And this was what was happening in the gold rush period. There was no, in the United States, there was no central bank. People were storing gold on one side and then taking pieces of paper across to the other and hoping that the other side of the country honored that piece of paper to say that they actually had that wealth. So fiat currencies kind of solve this problem a bit more by saying, okay, we will standardize these promissory notes so that, and we will back it by the government because we said so. Fiat means declaration. Basically say, because we say so, this has value. And actually the thing that governments go further to do is say that this is the only medium of exchange that a country is able to use. It's interesting to note that in every other industry, we think competition is worthwhile and good for the end consumer. But in finance, we accept a monopoly on currency. But that's diverging. Going back to the question, we have value in currency because collectively we believe there is value. And it's a circular argument, and it's a philosophical argument. But as Wei has said, as soon as we make a transaction, as soon as two people are able to come to an agreement on the exchange, then you have a value is created. And we use markets in many financial systems to come up with a value for things. So that's not new technology in the way we think about value. I think maybe if I may go further, you said, why does, you can create lots of currencies now.
There are how many cryptos now? Three, something like, I don't know, 3,000 is it?
Well, coming on to close to 10,000 if you look at CoinMarketCap. But if you're a bit knowledgeable and even a young kid with some knowledge around the technology, you can even use Bitcoin source code or software and download that and create your own, create a fork of it, and you can create a new currency, technically speaking. But as Wei said, if no one is willing to buy that currency off you, then it's worthless. It's like my son, who is 8-year-old, he creates his own currency by drawing on pieces of paper and saying that this is worth that much. If I'm not willing to exchange that for anything else, then the currency is worthless. So even though the technology has made it a lot easier to create currencies, you still need the masses or lots of people to come to an agreement about its value.
Interesting. Okay. There was a mention in your presentation about a maximum of 21 million bitcoins, right? So that's the extent of the supply, right? So that's what everybody is kind of like chasing and running after. Now, how does that work? And is it because of that certain extent of supply out there that the price of the crypto has actually been quite irrational and just multiplying exponentially? Where is the what is driving this irrational exuberance over Bitcoin?
Yeah, I wouldn't say it's irrational. I think there are
Okay.
participants that are rationally allocating their wealth into Bitcoin. Certainly, like any other market, there's a fair degree of irrational exuberance and action. So I think, like any asset, the main driver for its intrinsic value is supply. It's not the only driver for value. But it is a pretty big factor in determining an asset's supply. The less you have of something, the more valuable it can potentially be, if someone wants it, of course. So that's why it's not it's not 100% reason why it's supply. So I think I attribute the scarcity of Bitcoin, and also because it was the first, as the main kind of driver towards its value. There are other crypto out there, obviously, and that is gaining value for other reasons. But for Bitcoin specifically, I attribute its scarcity to its value. Yeah, its value to its scarcity.
Thank you, Glenn. Wait, what's going to keep this Bitcoin from blowing up like a bubble, given the kind of performance that it has had?
I think there are bubbles. Look, I think there are bubbles in all financial markets, and I don't like just like I don't think we're in a bubble right now, just because I think there's two factors, right? One is adoption, right? And then what is adoption? That's basically the key thing that's going around the US right now. It's like get off zero, right? That's like a hashtag on Twitter that's been trending. And then the next hashtag is get to 1%. What does that mean? That means basically all the Fortune 500 companies in the US will allocate 1% of their treasury into Bitcoin, right? Like just because if you do that and you've done that sort of the last 5 years, then your cash or your portfolio would have outperformed if you just kept it in cash or other types of investments, right? And then you're basically seeing major asset managers doing that, and then sort of corporate America hasn't really started that. I think we've seen a couple of companies in Hong Kong that started doing that a little bit in terms of allocating some of their treasury into Bitcoin and Ethereum, just as the sort of inflation hedge that Israel had mentioned in his presentation. And I think that like everything starts with an idea, right? And then you have sort of the first group that comes in that's doing it, like the MicroStrategies, the Teslas, and the Mark Cubans of the world, right? They're the one that's basically been quite aggressive into sort of allocating their assets into the sort of new digital asset category. And I think just in that fact itself, quote unquote, digital asset is going to become an investable category. And I think that's something that is slowly being built, right? Because you need a lot more infrastructure and a lot more sort of safety nets before sort of that becomes sort of much more pervasive and being sold to the mom and pops. I think that's the first bucket. And the second bucket is actually is actually like it's what's the word, like there's a formula in terms of how Bitcoin's supply will work, right? There's actually a limited amount of supply, like gold, and you can keep on digging, right? There's all these mines that's been not dug yet, right? Like Bitcoin, there's actually a finite number of supply, right? And the release of that supply halves every 4 years. Like last May, we basically had the Bitcoin halving event, right? And then that basically led to sort of, there's less new supply of Bitcoin being mined and released into the market. And I think, that formula is not going to change. That's a fixed formula set from day one. And when you have basically you have sort of, the demand is growing, right? And then you have a limited amount of supply. Then obviously there's price movement potential, right? And I think that's sort of, fundamental analysis I think a lot of people are doing, right? And I think that's something that could be, like, that's why I don't personally, I don't feel like we're in a bubble.
Okay. But don't you think that, I mean, gentlemen, don't you think that the ups and downs are just too high and low and often for this to be considered anytime soon as a medium of exchange? Is that something that,
Yeah, I mean, I'll jump into that. I mean, I actually think like there's actually, I think Bitcoin, Ether are two really innovative products. And I think the third sort of really innovative financial product is actually stable coins.
right?
Right. Stable coins I think stable coins will become the medium, become the medium of exchange of digital assets. Just given that it is tied, it is a value that you sort of refer to. Until I think there may be a day down the road, we don't know when that is, when the what is it, the referred price, right? Like, because right now most assets in the world, right? Stocks, commodities are quoted in US dollar terms, right? That's why US dollar, when it's pegged, when there's stable coin, it's pegged 1-to-1 to the US dollar. Most people sort of use that as the reference, right? Value, right? But maybe, I think ultimately, maybe, I don't know when, if it is, there's a day where it flips, right? Where Bitcoin becomes a reference price. Like everything, every stock, every commodity, even every fiat is actually quoted in Bitcoin terms. Then maybe Bitcoin becomes a medium of exchange, but I don't think we're there yet. I think the brand and then the general acceptance of the understanding of US dollars. That's why I think US dollar stablecoins does provide that medium of exchange right now. So.
Okay, thanks.
Yeah, I certainly kind of concur in that. I see Bitcoin as a store of value. Recommend a lot of people who are getting into it not to put their entire wealth into it. As Wei said, a common recommendation is don't put more than 1% or get towards 1% of your net worth into the currency, because it's highly volatile. And put that money in and don't look at it for 5 years. Do what standard financial advisors say and dollar cost average in, so that you average out the volatility that you might get. Maybe over time we might see Bitcoin being used more as a transfer or medium of exchange as other currencies. But if you look at kind of the moves that the institutional players are doing right now, like the Elon Musk and stuff, they're really looking at it as a store of value over time. And the store of value being, can I put my money in now, and will that value be maintained over the next number of years? And they're making a bet on Bitcoin around that over the US dollar.
We touched up a little bit about the central bank digital currencies, where you mentioned about stable coins. You mentioned also about Ethereum. What do you think is a better bet?
Why don't you go, Wei?
We already have.
That's a loaded question.
Yeah, we already have. No, I think like every currency that we have are basically central bank currencies, right? And then like if any country has sort of like an e-money solution, you're pretty much using that in the digital form. But the only difference now is I think they want to put that on blockchain, which is great, right? I mean, I think if all pretty much like we or at least I think central banks should try, because then you're basically they're being not forced, but then you have to be public about your supply and your printing, right? Because once you move it onto blockchain, then it's or you move it onto a public ledger, then it's public for everyone to see sort of the records and the transactions. And then I think you're seeing basically China trying out their digital yuan, in different forms, right? But it's a double. I think it's a double-edged sword, or it's a win-win, or one or the other. Just because it could either move in one direction of another form of control, right?
Mm-hmm.
Which goes against sort of goes against the philosophy of Bitcoin, right? Which is basically to introduce freedom, freedom of money, right? Financial freedom. I mean, but I do think that, right now, for Binance, we have BUSD, right, which is the Binance US dollar stablecoin that we've jointly issued with Paxos, right, which is a New York Department of Financial Services regulated sort of trust company that holds that US dollar and audits it, and then basically they will mint the digital version of that in the BUSD, right? You obviously have a market leader in USDT, which is kind of like which is probably one of the biggest sort of stable coin in the world right now, but with a sort of an unclear record in terms of where they're on the balance, right? Whether it's held 1-to-1, and you also have USDC, right, which is being pushed in the US and run by Circle. So I think these US dollar type of stable coins are I mean, it serves the purpose, right, of basically being the digital dollar in the crypto space. So I think whereas I think for the central bank digital currency, I'm very curious as to sort of who takes the first jump in the pool in terms of actually putting it on a public ledger.
Yeah. Yeah, I think I think it's only natural, that currencies are going to go digital. Blockchain technology offers a way to do that, but it also raises a number of questions in terms of how transparent are we going to be in terms of how much money is issued over time. And of course, money is issued a number of ways from a central bank through debt instruments and other different instrumentation. So it's not someone going down and hitting the printing press. But it also raises issues around privacy and individuals' privacy and freedoms. So do we entrust others to be able to monitor transactions or even censor our transactions? So censorship includes the ability to stop transactions between people. And so I think, blockchain is certainly a way or a technology that will be utilized. I don't, I think most people will see money going digital, and I would suggest just spread your wealth out. So don't keep it in any one place. And I think what Bitcoin has raised is that we are trusting our government for our store of wealth. And if that hasn't been apparent to many people, I think it has raised how much we trust on the governance of our country to be able to maintain the wealth that we often work hard to attain. Okay.
Israel, you mentioned about the privacy. I'm going to go into that kind of line of questioning. I guess the concern is there any kind of KYC to ensure that only appropriate profiled investors can invest, or how does it and that's why there's a lot of question about the bad actors there, because of that privacy or the lack of accountability. What are your thoughts on that?
Yeah, so I think you're touching on kind of several issues here. One is, I guess you could call it censorship, or the ability for people to buy cryptocurrencies with or without kind of KYC information of their identity. So you will, exchanges are typically the ones that are regulated to ensure that people who are participating or want to buy Bitcoin can do it. So for example, our exchange in the Philippines is regulated in a similar way any other financial institution is regulated, where we have to take a full KYC of people who are transacting with us We need to submit covered transaction reports to the Central Bank of the Philippines to ensure or even minimize illegal activities, in money laundering, either using the funds for illegal purposes or evading tax or other offenses that might be involved. So that can be regulated typically in an exchange.
Is it currently?
Yes, it is.
I mean,
So in the Philippines, and not every country is like that.
Yeah.
I think there's various degrees of regulation. But for our company, for example, we need to conduct the same amount of due diligence that a person needs to do if they were to exchange any other or even participate by assets. The privacy concerns also touch on whether or not that information is stored in transactions. So with Bitcoin, you can't tie a certain transaction to a certain person. A person's identity is not stored on the blockchain, and that's part of its appeal, in that it is similar to cash with that respect. So it is hard, it's not impossible to kind of trace those funds. So while as an exchange like us might take on identity information, we don't go about storing that information on a public ledger so that people will know what transactions are going on.
So how do we curb money laundering in that regard if there's no stored, if everything's anonymous? And what reporting is being done for covered transactions?
Yeah, so I think conducting KYC and standard AMLC checks at the exchange level helps curb, some of the money laundering activity. I think it's actually would go too far to be able to monitor every single transaction with the country, and that's kind of, I think, an infringement of individual freedoms. But if you look at there's actually some recent studies out there, there's very little kind of illegal activity going on in Bitcoin, far less than it was maybe 5 years ago. I think a lot of it is inflated to be sensational. There's more money laundering going on with a $20 US bill. And, my experience in the Philippines, I've seen many activities which would draw question to the movements of money just in everyday life with the amount of cash moving about. So I actually, I think that, the way you curb money laundering is at exchanges like ourselves. But I think it would go too far to try and monitor every single transaction. And there's potentially a lot more harm that you might be able to do in a society if a government or a body were able to do that.
So would you say too that, I'm sorry, would you say too that the accountability will rest with the exchange and not with the underlying asset, if you will? So because it's no recourse, there's no...
I think some accountability rests on the exchange to do what, to be compliant. We can never take full responsibility for, what people may use the cryptocurrencies that, they buy from us. And nor should we. That's the extent of our responsibility. Stops at our being able to identify, participants in the market in the Philippines. Yeah.
Okay. We'll address the next couple of questions to Wei. Wei, so what would be the risks of having to invest in a crypto, and why would you say people should do it? Mention a couple, but maybe we just need to kind of like push this along so that the audience is...
I think anytime you come across something that is new, it definitely there is a certain hurdle you have to go through, right? And I think people should invest into crypto. Obviously, you shouldn't put your all of your nest egg into it, right? I think start off with a little bit, try it out, because I think investing and then owning Bitcoin is a process actually, and then to have to sort of go through that is actually quite educational. In terms of like, to be able to not just sort of, to put your money into an exchange to buy it, and then take your Bitcoin off that exchange and then put that in your own personal wallet. And Binance, obviously we have the exchange part, but we also have a decentralized wallet and a trust wallet that we've invested in, right? And then we're also sort of looking at actively looking at investment opportunities, I think, in the Philippines as well, and Southeast Asia across the whole. And I think sort of whenever you're investing, my recommendation is just learn first, do your own research, right? And then just actually own a little bit of a Bitcoin. I mean, obviously, if you can afford to buy one Bitcoin, then congratulations, right? But if you can't buy a whole one, people know you don't have to buy a whole Bitcoin, but you can buy $100 worth of Bitcoin. You can buy $1,000 worth of Bitcoin, and then you own it, right? And then and then when you actually move that to your own personal wallet, where you actually control the access to, you actually physically own that. But I think it's just sort of the practice of that it's like, for me, I joke around with my friends. It's sort of like, once you start, because most people ask sort of originally as well, if I own it, other than for speculating, I can't really use it. Well, I was like, well, once you're sort of in the sort of the digital asset world, and you realize sort of the flexibility of it, and then the ability to sort of to do other things with it, you have to discover that on your own. There's other use cases of it that you probably did not know, other than just sort of, you probably come in for the speculation, but then you go away for for a bit to turn that into something else, right? Just because I think right now, in addition to sort of owning Bitcoin, there's also sort of one thing that we haven't really touched on is actually DeFi, which is actually providing a yield for your asset. Right, I think most banks around the world are providing 1-2% yield on your assets with them. But if you sort of can figure out, I treat like sort of like going to crypto kind of like playing a video game. Kind of like level 1, you have a very easy boss, right? Level 2, you get a harder boss. Level 3, you get a much harder boss. But once you sort of evolve into sort of like, oh my gosh, I can actually turn my Bitcoin or BNB or USDT or BUSD, and then turn that into a yield generating asset that gives me 10-20% yield, then you realize, wow, that's a whole new world for me to enter into. That's a completely different room that I've just discovered. So I think it's a journey. Like, it's a new way of investing that hasn't really existed before. And then I think it's a journey for everyone sort of to take that first dip, and then sort of can go and explore different rooms that's possible.
Okay. You touched up on decentralized finance or DeFi. Why is that such a big thing in this in crypto?
Let me try to explain.
How does it work? Yeah.
Let me try to explain this concept. It's decentralized finance is basically I am my own bank, right? Like I hold my own assets in my own wallet, right? And then I can access it and move it anytime I want, right? And then when I have my own assets, then I can actually, stake it into a protocol, right? And there are a variety of different protocols. On Binance, there's PancakeSwap. On Ethereum, there's Uniswap. And then there's sort of like Aave, Compound, FINEX, right? There's all kinds of protocols you can put your assets into, and then generate yield on that asset, because you're providing that asset either into a lending pool where someone else can borrow from, or you're providing that assets into a liquidity pool where someone else can basically use that liquidity pool to sort of swap assets, right, to exchange. And I think and what all that means is that I can stake what I hold into these sort of different protocols, right? Different smart chains, or protocols that run on these smart chains, like Binance Smart Chain being one of them, Ethereum, as I mentioned before, being one of them. There's a couple of other ones. And then when your assets are in these protocols, you can actually generate yield on it, right? And then the way you generate yield on it is actually you're providing the liquidity, right? You become sort of a lender, or you become a liquidity provider and a market maker, right? And then all fees that are generated from that pool that you've put your assets in, you get a piece of that, right? So you essentially you become like each individual based on sort of the ownership of the coins that you own. You basically can act as your own bank, right? And I think that's sort of the fundamental thesis underlying DeFi. Obviously, it's that's just one use case now. I actually think that, going forward, we're going to have, many more different quote unquote protocols that's going to come out where you can basically, put your assets into and then generate, different types of return from. But the source of it, like I mentioned, this is the third room you get to, where you're actually owning your assets in your own wallet, and then you know exactly how to move your money in and out of, from your wallet into these protocols, and then you know exactly sort of what wallets are, right? So I think that's like sort of, I would say that's the next evolution from an individual perspective, right? From an investor perspective, obviously it expands your universe of investment opportunities, because on top of Bitcoin and Ethereum, obviously you can invest into, DeFi protocol tokens. What does that mean? Well, if there's more fees being generated on this protocol, then that token that you hold, that's that DeFi sort of like, protocol token, a governance token, you can derive benefits from it. Right. So I think that's sort of, that's why I think recently there's a lot more tokens that are related to DeFi. Yeah. So.
Okay. At the end of the day, there will be hacks, bugs, super hacks. What happens then? Right?
Yeah. I mean, I think like to be honest, I actually think like the hacks that have, like, nobody's really hacked the Bitcoin blockchain, right? Nobody's really hacked the Ethereum. There's been, just because these are I would say these are open source codes, right? So people can see the codes, right? Like the way that sort of the variety of protocols and blockchains are being built, they're all being built in an open source type of environment. So people can actually, take a look at the code and then play around with it and then find bugs and find faults. It's kind of like the crowdsourcing. That's sort of like the decentralized world. I think the hacks that you refer to are basically hacks of, centralized organizations, right? Anytime you run a centralized organization, you sit on a large amount of assets, then you're basically a target for evil actors to try to attack and steal from. So I think that risk will always exist. How you counter that is basically, right now, there are a lot of service providers that we use that actually track the movement of crypto assets across different blockchains. Like, for example, we use company like Elliptic and I forget the other one. So we use a couple of these companies where they're called blockchain on-chain due diligence companies. And then they serve as a critical infrastructure within the crypto industry, in that they're able to sort of track the movement of coins. And it addresses, not just sort of the hacking issue, but it addresses sort of a lot of sort of the bad actors. Because you have to realize that Bitcoin sits on a public ledger. What that means that you can go to sort of, Bitcoin, .org or one of the, and then you can actually see every single transaction that takes place on the Bitcoin public network. And anytime there's a movement of Bitcoin from one address to another, then you can track it, right? And to a certain extent, Binance ourselves, we have, a large, we work closely with these vendors in terms of, identifying actors that that we've identified as bad actors and share, and basically, we can pinpoint these addresses to different IPs, to different, user, information. And to actually sort of, bucket them together into sort of a bad actor category, and then basically prohibit transactions, with these wallets. So I just think that, these are in my mind are basically, some of the infrastructure that did not exist, say 5 years ago, right? That do exist today. That's actually making the use of crypto much safer.
Yeah, I think a lot of this kind of goes back to good governance. You get rid of, or you reduce malicious activity through transparency. The software industry has long practiced open source software as a way to reduce bugs and reduce malicious software. But what we're seeing in Bitcoin is transparency around the storage and a recording of value. And so, I think transparency plays a key part in driving down potential bugs and malicious activities.
Okay. Israel, what are the transaction fees and the basis of the fees? If I were to, or first of all, how is the least hassle of making an investment in crypto?
Yeah, well, the least hassle way is to jump onto our platform, of course.
I'll give that to you.
Yeah, and that's there are other exchanges in the Philippines. We actually work with Binance in the back end with our technology, and find a lot of our liquidity with Binance. So we're in partnership there, and we pride ourselves in being kind of the cheapest in town if you're buying, and give a small spread. Well, it depends on the crypto, so I'm not going to be able to give you specific numbers, but look at our prices and compare. So the prices on the blockchain kind of depend on the different cryptocurrencies. I think typically with Bitcoin, we're around 1% on the maybe mid-market rate. It can vary again from day to day and depending on our supply. Don't quote me on that. But yeah, we try to be cheapest in terms of spread around the buy and sell point. And then we also try to be as cheap as possible when people want to withdraw money, and we're using similar infrastructure that every other financial institution is using in the Philippines onto the bank network. So depositing into our accounts, sometimes they carry transaction fee. I think it's like 50 pesos for 50,000 pesos. But that's pretty typical in the Philippines right now.
Okay. All right. Thank you. Wei, what's your price? I'm gonna wrap this up amongst ourselves, and then I'm going to start reading out the questions that are coming from the floor. But before that, I thought I'd ask you, what's your price target for 2021 for Bitcoin? I'm sure everybody's going to be waiting to hear that.
Yeah.
That's always the end question.
I can't say for 2021, but I think like the next sort of, the next wave is going to carry Bitcoin to $100,000. So
the next wave. Yeah. Okay.
Or the current wave.
Sounds like a fund manager. Israel, what are your crystal balls telling you?
Yeah, don't bet on this one. At least don't bet on it with a lot of your money. I'm hoping we're gonna blow past 100,000 in the next year, and I'm feeling quite bullish about it. Obviously, there's going to be lots of ups and downs in between that will cause a flow on of shorts and longs that are typical in any market. But yeah, I'm hoping we'll go past 100,000 and maybe even hit 200,000 in the year. Okay, so I'm being a little bit more specific there than you, Wei.
All right, but while we're on the question of the price, somebody's asking, what happens if regulations kick in? Will this reduce the price? Anybody?
Yeah, I think we've seen markets react in different countries in many different ways. So previously, when I think back when we started Bloom 5 years ago, whenever China's regulators said something about Bitcoin, the price would go reeling. We're seeing less of an effect of regulators on the market. Certainly, it has an effect on certain cryptocurrencies, but in Bitcoin, the price doesn't move as much as it used to when certain regulators say that it's banned or not. In some ways, it also makes it more scarce. So the ability not to be able to transact in a country may even increase the price of crypto in those countries that you can trade it in because they are scarce. So they do have an effect, but I don't think they have a effect that can stop Bitcoin's rise.
There's another question from the floor here, and it says, should we proceed to consider cryptos as investments? How will we manage the risk? Don't get to it. Don't put everything in it, right?
That's certainly one way. I think there's a lot of financial advisors in the audience that have ways of saying this possibly nicer than I do. First, there's a risk if you don't invest. So you need to recognize that not participating is also risky business. But if you are participating, don't put all your money in it. Like Wei said, it's a bit of a game. Start off with Bitcoin, and then as you learn and buy that, you'll begin to understand what the other cryptocurrencies are. And you need to be prudent in the way that you learn about those cryptocurrencies. I would, again, just suggest instead of buying that iPhone, put 50,000 pesos into Bitcoin, and your journey will begin. Dollar cost average in or peso cost average in to your investment. So whenever you receive a salary, perhaps set aside 1% of that income and buy into Bitcoin at whatever price that is. And it just accumulated over time, and don't look at the value for the next 5 years.
That's what I tell my clients too. Okay, here's another
there you
question.
Go. You could have said it for me.
Here's another question from Jen Pascual. Mr. Wei Zhu, you spoke about smart contracts. What regulatory framework will be required to enable its use beyond cryptocurrency? And how does its use prevent corruption in the transaction?
So for smart contracts, I think it's already being used. Like for example, like you look at sort of like when JP Morgan came out with their sort of in-house sort of I forget what the name of the service that they did. They tried to do like an in-house stable coin. That's based on a smart contract, right? When Facebook initially announced Libra, and then now they changed it to Diem, that's based on sort of smart contracts. I think smart contract is sort of like is the innovation that came out of on the Ethereum network, and I think a lot of that is basically it's written in codes, right? And then what's written in you can't really change it, right? So I think that there's an inherent sort of like incorrigibility, I think, within that within the smart contract nature. And I think in terms of regulations around it, to be honest, I don't have a good answer. I don't have a good answer to that, just because like how do you regulate a technology, right? It's a universe. It's a code that everybody can see. It's open source, right? You can go to GitHub and then basically view the code that powers that protocol, right? So unless sort of there's a new sort of regulatory regime that understands what this technology is, and then I view it as the same technology that powers the internet today, right? Like how do you regulate that? You can regulate information flow, which in this case you can regulate money flow, right? Because that falls under the financial regulators, right? Whereas like sort of information flow that falls under different countries, that falls under different regimes. But in terms of the core technology itself, I don't see any way you can really regulate that.
I had this question earlier, but I kind of didn't know where to put it in. But coming from the floor, it's been reported that crypto mining of Bitcoins have had or has an impact on the environment because of all of that kind of energy that's being created or generated. Can you give us some light to that, and how do we balance? They say that the mining the energy that's generated from all of the mining is equal to the energy that's being used up in like a whole country such as Argentina. So how do we balance that, especially in light of a lot of movement towards ESG kind of investing?
Yeah, well, I can take a stab, and I mean specifically about Bitcoin. Yes, there's a lot of so the actual process of mining takes a lot of energy. Back in the day, I could possibly download the Bitcoin code and spin it up on my computer and be rewarded for participating in the Bitcoin network, and possibly chew through a bunch of electricity of my household's bill at the same time. These days, mining is handled by kind of larger companies who have the technology that are able to do the mining algorithm more efficiently. And what you're seeing is that mining goes where electricity is cheapest. So wherever electricity is cheap, and I think there's some fascinating stuff being done around the interface between electricity production and mining, because mining essentially provides another way to store energy. You'll see mining migrate to. So I expect over time, we're seeing some innovations now that are producing cheaper electricity that's good for the environment. And I think over time, we'll see that happen. We're also seeing kind of underutilized resources of energy being tapped into for the purposes of mining. So we're seeing kind of methane gas, which has never been tapped into as a way to generate Bitcoin. So there's kind of untapped sources. I think it is a problem, the amount of energy that Bitcoin kind of consumes. And I think, like we've solved many problems in the past as a society, innovations will sprout up to be able to not only reduce the cost of the energy, but make it a little bit more environmentally friendly for those participants.
Thanks, Israel. Wei, you got some thoughts on the environment issue of mining?
I don't know that much about mining. I'll be honest, but I do know that sort of energy efficiency is something that because at the end of the day, it's a mathematical formula, like input versus output. I think as Bitcoin prices go up, different the renewable energy vector, which is actually an expensive source of energy, could come into play. Ideally, someone can create a solar farm that can farm Bitcoin. That's much more in a much more cleaner way, vis-a-vis sort of what's being done sort of right now. And I think what you're seeing right now is basically, there's not a movement, but I think you're actually seeing what's the word? Because I think most of the mining, I think, is done by miners in China, because they have a cheaper source of power. I think in some of the dams and hydroelectric and some of the other plants in China, but because of the access, that's sort of naturally where the market has taken it. But I think with Bitcoin price going up, you're actually seeing more investment into Bitcoin farms in the U.S. And then ultimately, who knows, like, where that's going to go, right? You may be able to mine Bitcoin in space or something someday. But I do think that what's sort of big, what's sort of at a bigger stake is that what's the environmental damage to mining gold, right, and to mining other types of precious metal that's used for storage value, and then how do you comp that? Right, like if Bitcoin one day does sort of dethrone gold, then there's less physical mining of gold and just sort of digital mining of Bitcoin. I just think that, and then sort of in the financial service sector, obviously that's another sort of a usage of power. I just think that in general, I think people ought to be conscious about environmental impact of it. But at the end of the day, I think the market will drive that more than anything else. And I think you have to think, if you think about it in a sort of a bigger picture way, is that, well, if Bitcoin replaces something, right? Does it put back that power that's not being used? So
just adding on the environmental cost of traditional mining is quite high. I remember being in Palawan and talking with people there of the effects of gold mining, the use of zinc and other kind of products, and its harm on the environment is something that is possibly harder to quantify, but it's certainly big, and possibly even bigger than some of what Bitcoin is producing or using up in energy environmental concerns.
Okay, this one last question before I actually ask you, gentlemen, to do your elevator pitch. This last question from the audience is a question from Wei, and it's with regard to Ethereum having a good algorithm for smart contracts. Its tokens are, I believe, almost 1 billion without any planned limits. How does this now give more assurance that this crypto will hold its value in the future?
Yeah, that's actually, yeah, that's a pretty easy question. I think like for Ethereum, there's sort of like, you can actually price it from like a price to earnings perspective, because Ethereum delivers revenue to its miners in the form of gas fees, right? And you can actually calculate how much gas fees generated, right? So you can actually calculate, you know, the revenue that's being delivered sort of by the Ethereum network vis-a-vis sort of the total market cap of Ethereum. And I think that I've seen that math done. I think anyone can sort of Google it and look for it. And then also the second part of that question is that there is a inflation rate that's sort of designed. I think initially at no more than 10% inflation rate, but I think now it's hovering around 2%. So there is actually an inflation rate that's sort of built into the model for Ethereum.
Okay. Thanks, Wei. I will ask you, gentlemen, you know, for an elevator pitch with regard to investing in crypto before I hand it over to our host. But it was nice talking to you. Had a very insightful afternoon. Go ahead. Do you want to start off, Israel? And
Or
we'll end up with Wei.
I think I've been pitching this whole 2 hours already. The pitch is buy your first 50,000 pesos worth of Bitcoin on bloomx.app /ard/FINEX if you want to participate in our little promo. But thanks again for this time. Thank you, Karen, for your questions, and Wei, good to meet you and talk with you via this webinar.
Yeah, Thank you, Karen, and then thank you to the FINEX, you know, everyone here for inviting me, and then for allowing, you know, Binance, Smart Chain and Binance Labs to be a part of this conference. Israel, I'm sure I'll see you. Hopefully, I'll see you in the Philippines when travel opens up. So appreciate all the questions, and then it's been fun.
Thank you very much, gentlemen. Off to you, Mark.
Wow, thanks, Karen, Wei, and Israel. It was a loaded discussion, to say the least. So now to wrap up and end our program, may I call on Consuelo or Zondi Garcia, Senior Consultant, Challengers and Growth Market of ING Manila Branch, and Liaison Director of the Capital Markets and the ICT Committees of FINEX. Zondi.
Okay, so good afternoon, everyone. I think the closing remarks is very anticlimactic after that very engaging discussion. You know, FINEX has actually mounted many webinars since the pandemic, but I must say that this webinar on cryptocurrency with special focus on Bitcoin really takes the record with the highest number of signups of attendees in the shortest possible time. And this just proves that this topic is the hottest button topic in town. And we were really very pleased that we have so many attendees today that stayed up to the very end. I'm sure that many of you are here for different reasons. Some of you are here that attended are actually already invested in Bitcoin and other cryptocurrencies, because two of our sponsors, Binance and BloomX, are two of the biggest changes that have been doing good business with Filipino investors. And Israel showed that graph that actually surprised me as to that the Philippines is one of those that have one of the highest investments in Bitcoin. So you are here already invested, but I'm sure you're looking for a confirmation from our experts that the recent correction in Bitcoin is actually a good entry point to double down. And with 100,000 expectation of the two, well, I guess, you know, it's double down then. Some of you are really already very astute investors, maybe clients already of Karen. You are invested in bonds, fixed income, equities, and even in commodities like gold. And you think of that as an inflation hedge, but I guess you're wondering, why is gold, the usual favorite as inflation hedge, seems stuck at the 1800 level? And there is this upstart of an asset that claims to be the digital gold that has now a market cap of more than $1 trillion, already 1/10 of the market cap of gold, that is 11 trillion, right? So now you have a lot of investable cash and you want to understand, well, according to Israel, you know, fear of missing out, you want to understand his asset better before you call your relationship manager to finally take the plunge. And both of them had recommended just 1 to 2% will actually be good enough. So you are going to do it now with your eyes wide open. Some of you are driven by a desire to really understand this space better because this is an asset that used to be held by a core group of passionate believers like Wei and Israel. You considered them before just a niche group, but suddenly it has become more mainstream, especially when you show the likes of Elon Musk invest 1.5 billion in one go. You may say whatever you want to say of Elon Musk, but this guy that has transformed the automobile industry and the space industry is really something else, right? So he puts 1.5 billion, you better sit up and listen. And you've seen the mainstream asset managers, even the more conservative insurance funds, suddenly allocate a portion of their fund in crypto assets. And even the global banks like Citibank and Goldman are getting ready with their ETFs on crypto assets to start their high yield clients to get invested in crypto. Then you realize that the train has actually left the station. The genie is out of the bottle. You cannot put it back. And that cryptocurrency will be here to stay in some shape or form. And now for the finance executives out there who actually represent the bulk of the attendees. You already know that in the new world order, digital payments will be borderless. They will be governed by a new set of rules, and it will upend what you know and how to move money and how to settle transactions that have long been dominated by the major fiat currencies like the US dollars, the euro, and whatever. You know that alongside these fiat currencies, there will be the rise of another digital currency, the stable coins, which as we speak, Facebook is about to launch Diem, previously they called it Libra, which they have deliberately stripped down to reduce the pushback from the different central banks who are threatened by the possibility that a successful Diem will undermine their authority. And then you have the different central banks who sooner than later, and it was alluded to by Wei already, will issue their own digital currency that will coexist with the fiat currency. And this space, China is really far ahead. And of course, in this new world order, you realize why cryptocurrency will have a role to play in your future. So, as financial executives, you need to future-proof your businesses. And you are here because you want to have a better understanding on how you will factor the rise of these digital assets and digital currencies in the planning of your future. And finally, some of you are here just because you're just plain curious. What's the buzz? And tell me what's happening. Whatever is your motivation, we in the FINEX, ICT, and Capital Markets Committees are thankful that you came here. Our main objective, as we told these two guys here, when we invited them, is we actually wanted just to move the needle of your understanding, whatever your motivation is. We want the believers to continue to believe in their product. We want the half believers to finally take the plunge and invest in crypto assets. And most importantly, we want you, our financial executives, to be better prepared to a new world order where there will be various types of digital assets and digital currencies in whatever shape or form that you will need to factor in for your company's future. So we are very privileged to have two of the best speakers on this subject, Israel Keys of BloomX and Weizo of Finance, to help you have a better understanding and give you better comfort on this subject. And I'm sure your nose did not bleed as much. We are thankful to them as well, BloomX, Binance, and RCBC for sponsoring this webinar, so we can invite all of you there for free. And I would like to thank also my team in ICT and Capital Markets and our hardworking FINEX staff who helped put this all together. And also our host, Attorney Goricheta, the legal expert in crypto. So if you need any advice, Mark is your man. And of course, my friend and colleague from the Filipino CEO Circle, Karen Roa, who bravely and ably moderated such a complicated but very fascinating subject. So thanks a lot, everyone, and have a good afternoon.
Thank you, Zondi. Thank you again for joining us today, and see you in Phoenix's next webinars. Thank you again to our sponsors and speakers, Binance, BloomX, and RCBC. Thank you, Israel. Thank you, Karen, and thank you, Wei. To everyone, enjoy the rest of the afternoon and stay safe. Thank you.
Thank you, everyone.